Hello traders, welcome once again. A month ago, Rayner published a video in which I briefly outlined my trading results over the last few years and shortly presented the strategies which I use on my daily trading. This is the video, and there were a lot of comments below, so let me start by responding to those comments. And I must say that the previous video was well received, with many comments being mostly positive, but there were also some in which the author doubted the effectiveness of my strategies. That is why I'm once again presenting the results of the last few years, including the last month, and in which I also didn't have even one losing trade. And it's the 15th month in a row successful. Here you can check my yearly results starting from 2022, where I had only 2 losing months. In 2023, 3 losing months, but altogether less than 1.5%. And this year, until now, all the months are profitable, sometimes less, sometimes more, but I'm trying to keep generally a profit around 5% per month. Here you can also check the general results. On this account I opened 1,377 trades, and 87% of those trades are profitable. So I'm still keeping the efficiency on a high level. Every trade is here seen. You can open the history, you can check in the history day by day what was opened, how it was opened, what was the level, what was the close, even what was the gain. So nothing to hide. It's updated every day, few days, even sometimes few times a day, so you can check it, you can watch it. Nothing, I have nothing to hide. So if the presented results are not able to convince an unbeliever, nothing can convince him. In the comments, there were also some people asking about the MACD indicator settings. I use a slightly modified indicator. Although it shows the same values as the original one, it differs in that it changes the colors when it reaches a maximum or a minimum. But the values are the same, so if you cannot use this one, you can always use the old one, but then you must check each bar after bar. Is it lower than the former? Was it a maximum or not? So using the double color MACD is just easier for me to find the moment when an instrument might become interesting, that it might signal a coming opportunity to open a trade. In order to give an idea of how my strategies work, I'll show you some few last orders and decision making process. Let's start with EURUSD, and the trade was opened a few days ago and closed here. Let's go to the charts, and I will try to explain why I made the decision to sell and what was the main reason. Well, when we look at the Euro USD, for the example, the daily chart, we can see that we had a double top here. This double top has a neckline here. Of course, someone would say it's not a double top because it's a bit higher. Guys, you cannot find on the charts geometrical patterns, like in the books. This is real life, this is real trading. So here's the neckline, here's the double top, and the right top, the last top, was inside bar pattern. Let me remove this so it will be easier to show it. This is the mother candle of the pattern, and then we have few inside bars, 2 inside bars. There was an attempt to break down with no success, and then the breakdown happened. In the same time, when the breakout happened, MACD started falling, creating a bearish divergence. So let me mark it for you. This is top. Those are 2 maximums on the MACD, and here we have 2 maximums on the chart. So this is a typical divergence. Divergence starts when we see the first red bar. It means that MACD created a maximum and started falling. So everything was in line with the rules, with the assumptions of my strategy, which those strategy assumptions look like this. Very simple. First, I'm searching for a pattern. It can be a pin bar, it can be inside bar, outside bar. What's important, I must validate this pattern. It means that it must be on a top of a swing or on a low of a swing. Then I check for a breakout. I wait for a breakout. The candle must close outside the pattern. And the third step is I check the MACD. Did it change the direction? And if the change is in the line with direction of breakout and maybe even a divergence started, this setup is very probable. So coming back to the chart, we can see here a nice divergence, breakout from an inside bar. This mother candle was on the very top. It was the highest level in this chart. So everything showed me that EURUSD will be bearish for some period of time. And we see that bearishness was confirmed by also bearish MACD. But of course the question is why I entered here, because I was trading also this distance, but the last trade I done on EURUSD was here. When we go to 4-hour chart, we can see that the reason that my take profit was here around this demand zone. Those demand zones are drawn by an indicator which is called SUPDIM, so it means supply demand. It's the indicator which I'm working on this, maybe probably 10 or maybe more years. It's a well-tested indicator, modified by me, and now I think it's really properly showing the supply and demand zones. But what was the reason that I entered a short position? Well, the answer is, of course, the second strategy I use. It's the strategy based on the first red strategy. It's a kind of a day trading strategy, slightly a scalping strategy, and the rules are very simple. As I mentioned, the rules are very simple because what I need the price to make a high, and after the candle which creates the high is closed, it changes the MACD to bearish. And of course, if this is a day trading strategy, I would even say a scalping strategy, which I call the first red. I usually open trades on 5-minute charts or maybe 15-minute charts. And if there would be a divergence, it would be even better, but not always we have a divergence. But it's very important that the candle, which begins MACD falling, makes it fall, is on the very top. Latest second or third candle can be used. But of course, let's not go too much into details, but let's go to the charts. And on the chart, this is my entry. So the reason is, from the high time frame, I saw that market is bearish. It was seen as a breakout from the inside bar and MACD continuing the bearishness. And then I need to make a decision when I join the trend, this bearish trend. And the decision is done because of this, what you see here. I look back to the left, I see that MACD on this day wasn't so high like now. So it is the highest level of the day. I check which candle changed the MACD to bearish. I look up and I see that this candle changed the MACD to bearish. So for me, it's a signal to sell. This was the third candle from the top. A bit late entry, but seeing that MACD is so high compared to the former periods, I decided to open it. Especially that I'm trading with the flow, with the trend, which makes this trade more probable that it will be a profitable trade. And the result is here. I closed it next day on the news. There was some news next day, and I closed it on the news nicely, which gave me a nice profit, which you can check on the list of closed trades on my journal on my FX book. Second trade which I would like to show you was on Aussie and Canadian dollar. I was opening two short positions. This trade was also, those both were also successful, and I would like to show you also the reason that I opened those trades. And here, once again, the reason that I opened the short position was the fact that price created a nice bearish engulfing pattern. This is the mother candle of the pattern. This is the engulfed candle. And after 2 days, they broke out from the pattern. And I was opening it on the breakout because this setup matched my 3 assumptions of price action MACD strategy. Pattern on the very top, so it's a valid pattern, breakout, and the third reason was that MACD started falling. So three steps: pattern, breakout, MACD, all matched. I opened short positions. Here on the lower time frame you can see the moment when the market was breaking out. MACD was supporting me, it was also showing bearishness, and I closed it on this huge candle. As I remember, this was a candle, also one of some data were coming. Why I closed it, why I didn't keep it longer? The reason is that it was Friday. I don't like to keep trades open through the weekend because very often it happens that they have some gaps and anything can surprise us. So I prefer, if I have a profit, I close it on Friday afternoon and don't keep it until Monday. And another setup, it was dollar with South African rand. It's a bit exotic currency pair, but if it gives me a signal, why shouldn't I trade it? And this trade, you can check, we can see it here on the charts. This was also a daily trade, because I'm mainly a day trader. And why the reason? Of course, the reason is like always. First, I check the high time frame and search for patterns. And here we had a nice, huge bullish engulfing pattern, which already changed the MACD to bullish. But of course, I wait for a confirmation. Market is breaking out. The problem with exotic pairs is that we have big spreads here, and we have also not only spreads, but also we have swaps. I have a swap-free account, so it doesn't matter for me. But on the exotic currencies, I have to pay swap. I have a swap-free account only on major pairs and gold. So definitely this trade would cost me a lot if I would keep it overnight, because the swap is horrible here. That's why after price broke out from this bullish outside bar and MACD confirmed the bullishness here, I opened and closed the trade in the same day. And this was this trade here. I opened after the breakout. I just missed the moment of the breakout, but when I see the market again pulling high, I opened a long position and I closed it here with a nice profit, because it was rather a big position, like if we speak about exotic currencies. So as you see, the price action MACD strategy is based mainly on patterns, candlestick patterns and breakouts from those patterns, which are somehow confirmed by the MACD, which is showing us, is it really a bullish or bearish breakout? So if you would like to know more about patterns, I think that the best source of information, education is you can go to Rayner's site, Trading with Rayner. This is the link, and you can choose this book. I think it's you can see here it's a kind of a Bible of candlestick patterns. Of course, you can check any other ebooks, because all of them are free. You may also be interested in the practical trading course we plan to do with Rayner at the end of November. And now let's go to the charts and let's see what can we find interesting for trading, maybe for the next week or the coming days. One of the instruments which caught my eye is Canadian dollar with Japanese yen. We see that the market creates a nice flag. It's a bearish flag, because usually means more often than 50%. The statistics show that the breakouts from such patterns happen to the bottom of the pattern. How this pattern is created? Well, let's take a look at this. We have a line connecting all the maximums here. So we can just make a parallel line to the bottom and we will have a channel. Of course, it's not confirmed. The channel will be confirmed if we see market hitting it once more and rejecting, or after some tests break it through. So generally from the daily chart I'm more bearish than bullish on this pair, especially that you see that MACD already turns bearish. When you take a look back in the history, when MACD is for a longer time growing and then comes the moment of a bearish candle, bearish bar, then it usually signals a change of the bias on the market. You can see what happened here. When you look to the top, it was just signaling some bearishness. The same happened here. But of course it must be extended. The more extended the MACD is, the better signal it gives. Here you can see it gave us a bullish signal. Remember, those are daily candles, and for an example, this candle has only 270 pips, so those are really signals giving a lot of pips. So let's take a closer look at the actual situation we see maybe on lower time frame. When you go to the 4-hour chart, we can see that the market created a kind of a head and shoulders pattern. Head and shoulders patterns, which head is a maximum in this surrounding, it means that it is a local maximum. Those patterns usually are reversal signals. We see the neckline here, we see the right shoulder, left head, and we see the neckline is just was broken and it's tested from the bottom. So this neckline is very important here. If market is able to stay below the neckline in coming few candles and it breaks the bottom here, it will be for me a signal to sell. At the moment cannot sell because MACD is slightly bullish, but of course it's not, it's rather flat for me, it's not extended, so at the moment I cannot look at the MACD on the 4-hour chart. But if I see them breaking the last low, it will be a perfect signal, which is like in the textbooks, you know, if you see a neckline being broken and being tested from the bottom, and then usually it does so. So for Canadian Japanese yen, I feel that this is a bearish market and this might give a lot of pips, because the closest demand zone, which as I mentioned, this is an indicator which is really reliable, you can believe in it. This demand zone is the first demand zone on the way down. So if they would break the bottom here, I would even expect a 200 pips declines. But at the moment I need a confirmation, and one of the confirmations will be breaking the bottom, and the second confirmation even maybe, if we take a closer look for an example on the 1-hour chart, we can see that market created a kind of a triangle here, and this was the bottom of the triangle. So at least let them break the bottom of this triangle, it is the support of a triangle, it already will be a good signal to sell. So maybe even I wouldn't wait for the breaking this strong demand zone, but maybe even I would risk and open a trade after they break the bottom. It's still another 20 pips. So for a day trader it's okay. But of course much more I expect if they break this strong demand zone, then we have a lot of pips to take. 120 pips in a day, no problem. So just to resume it, Canadian dollar with Japanese yen, I'm bearish on it. Another interesting pair might be dollar with Swiss franc. Look at the weekly chart. On the weekly chart we also have a divergence, because we see that from this minimum to this minimum we see that MACD creates a lower minimum, and in the same time on the chart we see the chart is creating higher minimums. This is a low, this is a higher low. This is a typical sample of a divergence, but this is a specific type of divergence. We call it hidden divergence. So divergence is when you see that price is creating higher highs, for an example, and MACD lower highs. We have bullish divergences, we have bearish divergences, and the hidden divergences look like this. We can see that market is creating higher lows, and at the same time MACD creates lower lows. This what we see here, we just see at the moment on USD Swiss franc. So from the weekly chart, I would say it looks rather bullish for me, especially that MACD is the second bullish week. It was a doji the last week, but it looks a bit bullish here. So I think that we are very close. We are very close to another leg up. When we look at the daily chart is bullish already, starting somewhere from here. This demand zone is rejected. It's not letting the price fall lower. And even on the daily chart, we can find also a kind of a pattern here. We can see that it is a triangle from which price broke out. And probably I would expect maybe after a small correction, they will go higher. This is a very interesting level which price might want to reach. Is 0.8730. Of course, we need breakout from this pattern because we see that we had an inside bar pattern after the breakout from this triangle. There was an attempt to break out, it failed, but if they try another once more and they succeed, then the doors are open to another 100 pips growth. Will they go higher? Hard to say, but I'm just looking at the moment at the closest future first few days. Also, dollar with yen might be interesting in coming days. Dollar with yen is strongly connected to the bond yields in the United States. The correlation between dollar and yen, the blue line, and the green 10-year government bonds from the United States, they are strongly correlated. When the bonds are falling, bond yields are falling, dollar yen is falling. When bond yields are growing, dollar yen is growing. The reason is known, but of course it's not the moment to explain it, but just take it as it is. And the bond yields might stop growing soon because the bond yields give us a hint what is the expectations of the market, how long, for how long period the interest rates will be high enough that the bond yields could be a bit higher. And those are an average yields in 10 years. And if Fed starts cutting rates on the next meeting, which is on the 7th of November, then probably the bond yields will stop and maybe even start falling. So I expect the closer we come to the Fed decision, the more the bond yields will be slowing down, especially that we have a kind of support and resistance level at level 415. Now it's now the bond yields are, let me check it, it's about 410. So expecting the bond yields to stop growing and maybe start falling, which probably would make the dollar yen falling, I expect also something interesting happening on this pair. Look, we have a strong support resistance level here. It was a strong resistance. Here it became a support. It might be tested by this pair. So it's about 180 pips away from the actual price. But what I'm waiting for is, of course, the change on the MACD. So I'm not trading it now. I'm waiting for the MACD to change to bearish, like it happened here. If you look back on the previous video, I was showing you a setup on dollar yen. It really gave me nice profits. And I think that we can expect also here some nice movements, but I wouldn't be a buyer now because we are slowly reaching probably the maximum of this correction, because this is a correction of those declines. Remember, end of the month, last week of the month, we have elections in Japan, which might be very volatile event. Last time when we heard that there's a new president of the ruling party, we saw what happened. Yen gained 400 pips within few hours. So be prepared that this instrument will be jumpy. But for me, I need a confirmation, and this confirmation will be a change of the MACD to bearish on the daily basis. This indicator here, which I'm using also together with MACD, shows me the level on which MACD will go bearish. At the moment it's 148.15, but each day it's moving. So maybe on Tuesday or Wednesday the price will be still growing, but this level will be also very close, and one day we'll see MACD turning to bearish. For me, this will be a signal, start selling, and we can start selling maybe from here, maybe from here. We have to we have to wait for the red bar here, and then we can really short a lot. 500 pips is very possible. Look, last time when they hit this resistance, they made in 4 days they made 400 pips. So it's really a very interesting pair, but we need to wait for a signal. For today there's no signal. The signal will come when MACD goes bearish. Okay, so that's all for this recording. If you want more, just you have space under the video, you have possible to write comments. So if you are interested, we'll make another video this type. And of course, don't forget to visit this training with Rayner's site, where you can get absolutely for free, really a lot of free education. And that's what I could really advise you. Please take a close look at this part, candlestick pattern. They can open the doors to profits for you. Thanks a lot.